Hello, welcome to the Genuine Learning Blog. Today, we're tackling a big question. Who's really in charge? And no, we're not debating 80s sitcoms like was Charles in charge or who's the boss, Tony or Angela? It was Angela. We're diving into FASB's latest proposal on determining the accounting acquirer in variable interest entity VIE acquisitions. So let's set the stage here. Why is this proposal necessary? Well, existing guidance has two key issues. The first, a lack of comparability between VIE and non-VIE transactions. Specifically, practitioners call out that where the VIE is the acquiree, the transaction can't be accounted for as a reverse acquisition. They want that changed. The second issue is inconsistent application when identifying the accounting acquirer. In short, the ambiguity of guidance results in varied conclusions and misalignment between the substance of business combinations and their accounting treatment with respect to acquirer identification. All right, so let's dive in. We've got our issues here. What are the key highlights of the proposal? How are we trying to fix this? Well, first, they're going to broaden the scope here with the hope that that improves comparability across similar transactions. Second, they're replacing the automatic designation of the primary beneficiary as the acquirer. And instead, we're going to introduce a focus on specific factors, recognizing that these transactions, these combinations often involve nuance. Third, it clarifies what criteria we should use during that assessment of who's the acquirer in VIE-related combinations. And fourth, and perhaps most importantly, it emphasizes economic substance over form, because at the end of the day, substance is what truly counts. As the movie Shrek wisely teaches us, ogres are like onions. We have layers. Similarly, business combinations are like onions. They often come with layers of complex relationships, and we have to assess to get to what the true substance actually is. All right, now that we understand the elements, let's address the big question. What types of transactions are being brought into scope under this new guidance? Well, the proposed guidance specifically brings into scope business combinations where the VIE is the acquiree and equity interests are exchanged. That's the big difference here. Now let's explore some real-world scenarios involving equity exchanges. First, a company enters a new market by issuing stock to gain control of a VIE. This is new because you're issuing stock. There was no cash exchanged, right? Second here, two companies establish a joint venture. One contributes cash or equity being the key there, while the other provides operational assets. Third here, a company swaps its equity for an existing equity interest in a VIE, effectively using its stock as currency. It's not using cash, it's using equity, and so now it's going to be brought into scope with the new guidance. These examples highlight how the guidance and them bringing it into scope addresses modern, creative deal structures that extend beyond traditional cash transactions. But what happens when there's ambiguity in determining the acquirer versus the acquiree, even in these new situations that have been brought into scope? What factors should we use to evaluate who is the boss, who is the acquirer in these situations? So who's in charge? Who gets to wear that acquirer hat? The new guidance provides some clear criteria. So the acquirer typically holds the largest voting rights or controls the majority of the governing members. Also, their former management often dominates the combined entity, or they're usually the ones paying a premium. They're the ones motivated to get this combination done, so they're going to pay a little extra, sweeten the deal a little bit. But there is not a one-size-fits-all approach to identifying the acquirer. We need to make sure that we're bringing that good old professional judgment and skepticism to the table when we run into these transactions. All right, the ASB is open for comment, but do not wait if you want to comment because the clock is ticking and the comment period closes Monday, December 16th, 2024. So if you've got opinions, now is the time to share them. We've got links to the proposal. Just remember, your voice matters. You can be in charge of shaping the feedback and this new guidance. But if you miss the deadline, hey, at least you are now aware of what could be coming down the guidance pipeline with respect to business combinations. That wraps up this week's blog. If you've got a business combination on the horizon, stay tuned to see which parts of the proposal make it into the final guidance update. Thanks for tuning in. Happy debiting, happy crediting, and if I don't see ya, happy holidays. Take care, everybody.